Welcome to the most comprehensive guide to personal finance for U.S. citizens in 2026. If you've been looking for a roadmap to financial freedom, you are in the right place. Today, we aren't just skimming the surface. We're doing a deep dive into 11 essential pillars that will define your financial success this year and for decades to come. From tax strategies to estate planning, we've gathered the latest 2026 data to help you make informed decisions. Make sure to stay until the end for our exclusive comparison checklist. Pillar number 1, the 50-30-20 budgeting rule. This is the foundation of all wealth building. 50% of your take-home pay goes to needs like housing and groceries. 30% is for your wants, the things that make life enjoyable. But the most critical piece is the remaining 20% dedicated to savings and debt repayment. The secret to making this work isn't willpower, it's automation. In 2026, there are more tools than ever to help you categorize spending automatically and stay on track without stress. Commit to a monthly financial audit. Look for subscription creep, those small monthly fees that add up over time. Reclaiming just $50 a month can lead to thousands in long-term wealth. Pillar number 2, your emergency fund. Think of this as your financial armor. Without it, one unexpected medical bill or car repair can force you into high-interest debt. In 2026, don't let your emergency cash sit in a standard savings account. High-yield savings accounts now offer competitive rates that help your safety net keep up with inflation. An emergency fund provides more than just money. It provides peace of mind. It allows you to make career moves or investment decisions from a place of strength, not desperation. Pillar number 3, mastering your credit score. Your credit score is one of your most valuable financial assets. It dictates the interest rates you'll pay on everything from cars to homes. To maximize your score, keep your credit utilization below 30%. This means if you have a $10,000 limit, try not to carry a balance higher than $3,000. Check your credit report regularly for errors. Identity theft is on the rise, and a single mistake on your report can cost you thousands in extra interest over the life of a loan. Pillar number 4, leverage retirement vehicles. If your employer offers a 401k match, that is an immediate, guaranteed return on your investment. It is the closest thing to free money in finance. Understand the 2026 contribution limits for both 401ks and IRAs. Aim to increase your contribution percentage by at least 1% every time you receive a raise. The greatest advantage you have is time. Compound interest turns small, consistent contributions into a substantial nest egg. The best day to start was yesterday. The second best day is today. Look at this chart. Waiting just 10 years to start saving for retirement can cut your final balance in half. Every year you wait is a year of exponential growth you'll never get back. Pillar number 5, optimize your taxes. It's not about how much you make, it's about how much you keep. Understanding the difference between tax-deferred and tax-exempt growth is crucial. Consider strategies like tax loss harvesting in your brokerage accounts. By selling underperforming assets at a loss, you can offset gains and reduce your overall tax bill for the year. Familiarize yourself with the 2026 tax brackets. Knowing whether you are in the 22% or 24% bracket can help you decide whether to make pre-tax or post-tax contributions. Tax laws change frequently. Working with a qualified CPA or tax professional can often save you far more in taxes than their service costs, especially as your net worth grows. Pillar number 6, strategic debt management. If you have multiple debts, choose a method that fits your personality. The snowball method builds momentum by paying off the smallest debts first. Conversely, the avalanche method focuses on the highest interest rates first, saving you the most money in the long run. Whichever you choose, the key is to stop adding new debt while you pay. Treat high-interest credit card debt as a financial emergency. With interest rates often exceeding 20%, this type of debt can erode your wealth faster than any investment can build it. Pillar number 7, asset protection through insurance. Wealth building is offensive. Insurance is your defense. You need to protect your ability to earn an income and your physical assets. Review your disability insurance. Many Americans are underinsured here. If you couldn't work for 6 months, would your family be okay? Also, ensure your life insurance coverage matches your needs. Your insurance needs change as your life does. Getting married, buying a home, or having children are all triggers to reevaluate your coverage levels and beneficiaries. Pillar number 8, intelligent asset allocation. Diversification is the only free lunch in finance. Spreading your investments across different asset classes reduces risk without necessarily sacrificing returns. In 2026, low-cost index funds remain a powerhouse for the average investor. They provide broad market exposure with minimal fees, ensuring more of the market's return stays in your pocket. Your allocation should be a reflection of your timeline and risk tolerance. A 25-year-old can afford more volatility than someone 5 years from retirement. Be honest about your comfort with risk. Pillar number 9, automate to succeed. The most successful investors aren't the smartest, they're the most disciplined. By automating your contributions, you remove the temptation to time the market. Set up automatic transfers that coincide with your payday. When the money never hits your checking account, you don't miss it, and your wealth grows quietly in the background. Pillar number 10, estate planning and legacy. This is often the most overlooked part of personal finance. It's not just about what you leave behind, it's about protecting your loved ones from legal hurdles. At a minimum, ensure you have a valid will, a durable power of attorney, and updated beneficiary designations on all your accounts. These simple steps can save your family months of probate. Pillar number 11, beware of lifestyle inflation. As your income grows, it's tempting to upgrade your lifestyle immediately, but the key to real wealth is keeping your expenses stable while your savings soar. Choosing to live below your means isn't about deprivation, it's about buying your freedom. In 2026, the real status symbol is financial independence, not the latest gadget or luxury car. Here is your 2026 financial roadmap. 1. Automate your 50-30-20 budget. 2. Secure your emergency fund. 3. Optimize your tax-advantaged accounts. 4. Review your protection. And 5. Finalize your legacy plans. Success starts with a single step. Personal finance is a marathon, not a sprint. Each informed decision you make today will compound into a life of options and security. Focus on the long-term vision, and you will achieve your goals. Which of these 11 pillars are you going to focus on first? Let us know in the comments below. We'd love to hear your goals and help you stay accountable on your journey. Thank you for watching this masterclass. If you found this guide helpful, please give it a thumbs up and subscribe for more in-depth financial education. Here's to your ultimate success in 2026.